Good afternoon, guys. It's James Gerrish for another recording of Direct from the Desk. It's August the 16th, about 2:15 in the afternoon. I want to focus on a couple of things and a couple of frustrating things that's happened to us in the market this week. I want to focus on RIO, which we exited yesterday, and some subscribers may not have been able to get out at the level that we got out. And I want to focus on Challenger Group Financial, CGF, a stock we're wanting to buy under $11.50 today. It traded to $11.51 and has snapped back pretty hard. So I want to touch on both of those things. Just before I do, the market continues to be range bound, 57.59. That 58.36, 56.29 level that we've been talking about for the last, feels like an eternity, but it's about 13 weeks, continues to hold. So some sectors are doing well on a daily basis, some sectors are not. So overall, the market's not doing much. But as I wrote a couple of a week or so ago, it's a market full of stocks rather than a stock market. So take that into consideration. I'll go first in terms of Rio Tinto. I'll just grab the chart up. That's the US one. We'll get the Aussie one up here. Okay, in terms of the Aussie Rio Tinto, 62.57. As we put out yesterday, we were sellers above 63.50. I know it's frustrating when something like that happens. The alert went out and the stock dropped pretty quickly thereafter. So at this stage, below $63, I wouldn't be panicking. You know, in our point of view, if we're still holding it, we wouldn't be panicking and getting out of it. Our reason for selling it yesterday was our shorter-term belief that the US dollar could find some strength, and that might put some pressure on the resources stocks. The US dollar did find strength overnight, and resources are under pressure today. So, you know, in hindsight, it was a reasonable call. But at this stage, I think you'll probably get another opportunity for those who missed the boat above $63.50. So reiterating, we did sell a $5 holding around the $63.50 level yesterday. But for those out there, we'll continue to cover it in the very near term. It was all around reporting season at the moment, and I want to tick on to another stock that we're looking to buy today, and we got very close. Another frustrating stock that's come into our that almost came to our portfolio today, Challenger Group Financial. So they reported yesterday. We were buyers, and we wrote this in a number of reports in weeks gone by, and again this morning, we'd be buyers below $11.50. Funnily enough, the stock got down to $11.50 today and has bounced to be trading at $11.93. So, you know, markets can be frustrating at times. But again, we're going to stay patient in terms of Challenger. We didn't buy any. We didn't get the alert out in time. And we'll be patient in terms of Challenger. In terms of their result, just to give you a quick backdrop, cash earnings of 385 was reasonable. I think there's a couple of swings and roundabouts in the result that they came out with. They obviously launched a capital raising, and this really outlines one of the key issues within Challenger is around, you know, they're sellers of annuities or providers of annuities. Annuities are really capital intensive, so the regulator makes them hold a lot of capital when they issue an annuity, and so when they sell more annuities, they need to raise more capital. I think that's the main point you need to make in terms of Challenger. One of the things they've done in recent times, and this has impacted their fourth quarter annuity sales number, is that they've stopped selling lower margin products. So lower margin products are the shorter term annuities, the 1 and 2 years, where they don't make a lot of money out of it. They're now lengthening their book, selling longer term products, which they do make more out of it. So I guess if you sit back and think about it, they either can sell more volume of lower margin product, or they can sell less volume and improve their margin. So right now they've made the decision to sell less lower margin product, and in Q4 it was sort of the turnover of that insofar as the volume growth wasn't what the market was anticipating, and they were seeing some pressure on margin. So look, to me, Challenger is an incredible stock. It's got a lot of demographical tailwinds, it's got a lot of regulatory tailwinds behind it, but you've got to be patient here, and if this market falls over, you'll be able to get Challenger at cheap levels. You can see how it's dropped from above $13 down to $11.89 it's trading at now. So anyway, I just want to give you a quick update on Rio. Frustrating. Challenger, frustrating, but stay patient on the two. Bye for now.